Now, a key narrative, of course, has been what's going on in commodities, the US dollar, and of course, lithium. A little bit of push and pull. Goldman Sachs last week again throwing cold water on the whole lithium story. So let's find out what Shawn Hickman, research lead at Market Matters, has to say about that. So welcome. Nice to see you.
Good morning.
Lithium has been such a story in 2022. Lots of people have made quite a lot of money. But the question remains, what happens when there's more significant supply coming on? Because I'm sure you're aware, like every third announcement on the ASX these days is talking about lithium exploration or lithium drilling or lithium discovery.
People love lithium. They love the ESG story. It's the most crowded position on the market at the moment, according to the Bank of America survey last month. So people have bought the ESG theme. We all know we're going to a cleaner world. We all know that electric cars are more prolific on the roads. But there's two sides to the equation, supply and demand. Demand's picking up, but so will supply. It always does when prices go up. And that is the really interesting situation at the moment. We've got 23, 24, Goldman Sachs saying about 11,000 US dollars a ton, Macquarie Bank near 70,000 US dollars a ton. That's a big gap there. You drive a train through there.
Yeah, so what does this mean, I suppose, for the Australian producers? Because we do have we've got the Pilbaras of the world, that are here and producing and already meeting this market.
I think I look at it more from an investor's point of view rather than the company's point of view. These guys are going to do well. They might not do well next year or in 2 years' time. In the bigger picture, they should do well. But I think from an investor's point of view, you've got to look at the risk rewards. People are long. We've seen some huge volatility in these stocks. And that's how I think we should look at it. We should look at it, where is the good risk reward in buying these good quality companies in a growing thematic, but don't charge in and buy strength. At the moment, you could be in danger. I mean, at the end of the day, people are looking at what Goldman Sachs has said and they are going to be nervous. For example, we've got our valuations wrong.
Yeah.
And we've seen the pullbacks accordingly already.
We've got a Pilbara Minerals chart I think we can bring up. It's a weekly chart. So what we're seeing here in this candlestick form is that pullback that has happened just very, very recently. Do you anticipate there will be a better buying opportunity, say 178, 195, or are we sort of past that? Is that done and dusted?
Well, obviously this is crystal ball stuff, but again, it comes back down to risk reward. We're quite boring at Market Matters in that regard. We're looking to buy a stock that we like, it's good value, at a price where we perceive the downside is limited. And look at the chart already. It's pulled back $2 already once this year, or $1.92 if we're being pedantic. Why not again? So right here, right now, around the $4.50 mark, we're waiting. We sold it actually at $5.50. I think that's a little bit more luck than judgment.
I was going to say, good job.
That wasn't crystal ball. That was one of those lucky ones that's always nice to throw in occasionally.
Yeah.
But if it comes back down to around $4 or below $4, we'd start accumulating again.
What about mineral resources? So many people talk about, just the genius who's running the company and all of the prospects there when it comes to lithium and processing, as well as the other business, which of course is iron ore. Let's get the weekly chart up, because it looks to me as if this has sort of been one direction trade for quite some time for mineral resources. So do you anticipate, if we can get that mineral resources chart up, any type of a pullback coming from here?
Well, there we go again. I think it's the same thematic. It's a great company. We like mineral resources. We wish we'd owned it for more of the year. But if that comes back down under $80, the same situation, we'd be looking to put our hands up. It's a few more moving parts here, as you said. There's the iron ore, etc. There's the lithium. But if we get negative sentiment towards lithium, we've already had a fair degree already over the recent weeks. You could see mineral resources come back down under $80. It's no more than a blip in the scheme of what's happened this year, but it's still 10%.
Yeah.
And 10% is not irrelevant in terms of a portfolio on an annual basis.
So how does the US dollar relative strength that we had seen most of the year, and now we're seeing a bit of a moderation of that trend, play into your thesis and your expectations for the commodity sector here in particular?
Okay, I think it's probably the pivotal thing for the next month or two. And we've had a big pullback from that 114 to 104 area. Just not quite 10%. There we are. You can see it on the chart, almost 115. And I think this week we'll put a cat amongst the pigeons. Our view, and it's dangerous to have a view into the CPI, into the Fed, into the Bank of England, into the ECB. It's very dangerous to have a view that's too cast in stone. But it's come back a long way. I can see it bouncing around between that 104, 105 and 109 mark, just having a rest. If that's the case, the commodity sector will also probably have a rest. But the stocks have been very, very strong. If they have a rest, that's not too bad. I mean, they're still yielding tremendously. So we like commodities, but again, it's not a sector I'd be buying into strength. We actually sold last week. So we took some profit on part of our BHP position. We took some profit on part of our Samphire Resources position. They've gone beautifully. They've had a great run. Again, the risk reward, take a bit off the top, reassess. If they come back a long way, we'll buy back in.
What about the market overall? Because we have seen a little bit of a pullback in the past week or so. Rally last night, expected here today. But as I said, one of my previous guests said this doesn't really have any substance. And you mentioned all the big risk events on the horizon. I mean, are you waiting for a more significant pullback in this local market to buy back in, to deploy some of those profits that you just took?
No, they weren't big. I mean, they weren't huge amounts of percentage. We've been long aggressively since early October, and we just took a little bit off the top. So I think we were holding 8 or 9% in BHP. We just took 2% of that off. It's not a huge amount to trim back at a position. I don't necessarily agree with your guest before. I think the move last night is actually telling us a story we shouldn't ignore. It's telling you that going into this uncertainty, and it is uncertainty, that the market had got itself too bearish, too short, too underweight. And the buying we saw last night was people squaring off. In other words, the path of least resistance to me is more on the upside than the downside. There's a lot of higher interest rates, higher bond yields built into prices. And if this week's fairly moderate on the news front, I think equities can squeeze higher into Christmas.
So what about that chart for the NASDAQ? What's that showing us?
It's showing a frustration story from our point of view. That's the one part of the market that's on the macro front we've been a bit, well, so far wrong on. We thought that with the pullback in bond yields, the pullback in the US dollar, we'd see this, the NASDAQ or the growth sector in the US squeeze back up towards that 13,000 area. It hasn't yet. People are still not believers that tech stocks can rally. For US stocks to have a decent rally, we're going to need to see them get back into their stocks. Maybe the move in Microsoft last night showed a bit of hope is out there, but it's not quite coming through. But coming back to our market, the ASX 200, which most watchers will be looking at, it's had a 3% pullback. This is seasonally a very, very strong time for equities. Historically, this is the time of year where I wouldn't be short. So if I was a trader, I wouldn't be short. I might be long, I might be neutral, but I wouldn't be short. After a 3% pullback, 9 trading days before Christmas, to me, you're either long or you're out. Nothing wrong with being out. A lot of balls in the air, a lot of things happening this week. The easy trade is actually to be out. It's to say, let's keep away. It's a bit scary. But to me, the brave trade might well to be long, and market can go higher. So I think we can see a test of 7,400 into Christmas. It's not a long way. It shouldn't really change hugely how you have your portfolio structured, but I think we can squeeze a bit higher, which we'll be selling into, I do.
Okay, so you'd be selling into it, and that's the big PS.
Yeah, we'll be, again, drifting positions off, tweaking positions, portfolios, risk into that, coming down the risk curve. We are at the top end of the risk curve from ourselves. The start of October, as I said, we're looking to migrate down that risk curve into strength.
Now,
which hopefully
I think
through.
you sort of touched upon it earlier, but you would look to redeploy some of that capital into commodities if you're bullish on commodities into 2023, or where else, sector-wise, are you looking for opportunities still?
Well, at this stage, if we're looking to migrate down the risk curve, we're looking for safer, it's a dangerous word in this day and age, isn't it? For stocks that are going to pay reliable dividends with reliable earnings, haven't got too high valuations. So probably almost a boring portfolio over the next 6 months. So I don't know if you can get the chart of outcome up, but that was one thing I did want to show, which is how volatile some of these lithium stocks, commodity stocks have been. You can't underestimate how far they can move. They can have huge swings.
Okay, don't know if we can get that Alchem chart up, but we'll leave it for next
That's
time.
okay.
I think you've made the point well. Really interesting to have a chance to speak with you.
Absolute pleasure, and I think the key is, as we go into Christmas, be active. This has been a year for active investors, not traders, active investors. Be prepared to take a bit of profit and buy back into weakness.
Yeah, well, 7,400 not out of the question by the end of the year, according to Shawn Hickman from Market Matters. Thank you.